All right, hope everyone's doing well. This is going to be a tutorial on price bias levels. So this is not one of the cysteine research indicators because it's not really an indicator at all, but these support and resistance levels can be very, very strong and very, very helpful. So part 5 is going to be coming up next where we identify all the support and resistance clusters, and price bias levels are going to be a key component of those support and resistance clusters. So what do I mean by price bias levels? Well, it's similar to, you know how like when you go through the checkout line, everything's priced at, $1.99 or 99 cents or $4.99. We have these price biases ingrained in our minds where we think it's cheaper. It's actually called like rounding bias or left digit bias, right? So there's two things at play here. Left digit bias is basically your bias as a human being to think that $1.99 is closer to a dollar than to $2 because the left digit is one. Rounding bias is human nature that makes us think that $1.49 is uh, closer to a dollar than necessarily like $1.50, right? We round down naturally. So we're constantly in our head doing all of these rounding calculations. So we round $1.49 down to a dollar. We take $1.99. Yes, we might round it to $2, but because this left digit is one, and even in this case, this left digit is one, left digit bias can kind of override that, right? And because trading because price action more so is just a culmination of people's conviction in the market and behavior in the market and buying and selling, people are more inclined to view an asset as cheaper or less expensive at $1.99 versus at $2.01. If you don't believe me, you might be thinking like, oh, that's just simply not true. Actually, there is a ton of research that indicates that there's statistical significance to this, right? So this is from a paper called, I think it's called Dollar Pennywise Dollar. So I don't know. I'll try to link it below. I forget what this research paper is particularly called, but I can see if I can link it. But essentially, you see the number of buyers versus the number of sellers, the ratio between buyers and sellers at 99 cents versus $1.01, or integers that end in 99 cents versus integers that are or slightly above an integer, 1 cent above or 1 cent below an integer, which would basically be in our example $1.99 stock price versus and this is not like a study that's studying like candy bars in the checkout aisle. No, these are equities, like actual equities. And obviously this is going to extend to crypto as well. But $1.99 versus $2.01. The difference is significant, extraordinarily significant. And the implication is that these integers, these even numbers, are large support and resistance levels. So if you look at the number of buyers versus the number of sellers, you have 1.5 buyers for every seller at 99 cents, right? And not only do you have more buyers than sellers at 99 cents, if you go down 2 cents, you have more sellers than buyers. The relationship turns negative. And you look at the dollars bought versus the dollars sold, it's even stronger of a relationship. $2.626 bought versus for every dollar sold, and then it's the relationship turns negative, right? As soon as you move above integers, right? So kind of extrapolating this out into our charts here, we can very easily find these psychological levels. We don't need an indicator to find them. Actually, I'm going to show you how to find them like in bulk really, really quickly. But yeah, let's actually go there first. So obviously, the example we just ran through is $1.99 versus 201. Well, in the case of Bitcoin, right, the same logic is simply going to extend to every $1,000 or every $5,000. It's just larger numbers. That's why you see so many people, talk about, the $50,000 resistance, $100,000 resistance. 25K has been a big level. So let's actually throw this on. Let's go out to our daily chart. The easiest way to find these levels in bulk, just to glance at how strong of support and resistance they are, simply go to your settings, your chart settings, go to canvas, go to grid lines, horizontal only, right? So these horizontal only grid lines on our linear chart, we want to be on linear, not logarithmic, because obviously logarithmic is going to be scaled differently and not linearly. We want to isolate for every, let's say, $5,000. Well, that's easy. We just kind of scroll down until the scale changes to give us a line every $5,000. And would you look at all of the support and resistance? Now, is it perfect? No, because no asset is going to trade solely based off of psychological price bias levels, right? That much should be obvious. But you're going to very clearly see that there are some very key interactions at $25,000, at $20,000, at $30,000, right? Look at $30,000 over here, huge level, right? $40,000, big level, multiple interactions, multiple bounces, multiple points of resistance, $60,000, $65,000, right? Going back to the previous all-time high, it was 19.7K, but front ran 20K. 10K was a huge level where we saw tons of support and resistance. And the same thing can be thrown on literally any asset, right? So we go to, Solana, and we just want to carve these up by, let's say, every $5. Let's call it every $5. So right there. So we've got 10, 15, 20, 25. Look at all of the support and resistance around 25. Look at all the, resistance around 25. Look at all the support around 20. Look at the interactions with $15, right? Look at the interactions with $30. Is it going to be perfect every single time? No, there's going to be times where you kind of overshoot it. But once even here, we overshot the $32. Where did we hold resistance? At our range high that developed at around $25. Right? So I'm not suggesting that anybody trades solely based off of these, price bias or psychological levels. What I am suggesting is that they can be a key variable or a key component to a trading strategy if that trading strategy centers around horizontal support and resistance levels, which my strategy does. I trade off of support and resistance clusters, right? So adding these levels in, and I'll just kind of show you how that manifests or how that ends up looking. Let me clear these off. Go to none, and I'll show you how I make these charts in the next video, the next tutorial video. You can see I've got some of these price bias levels in here to find our support and resistance clusters, right? So we're mapping out support and resistance using many different methodologies, one of which is this methodology of price bias levels. But you can see here, for example, I've got $25 price bias level. If I zoom in here, you can you barely see it because it's so messy, but our $20 price bias level is a level that I've been farming in line with this one-to-one risk reward level. Been farming bounces at $20, just above $20, because I know there's going to be support here. It's a big level, right? For other reasons too. There's other support here. It's also strong structural support, but we have two levels here. We have a price bias level, a very strong one, $20, right? We're protected to the downside with a cluster down here for leaving our stop loss below, right? And then we have our one-to-one risk reward level, which we talked about in the last video. So when you combine these methodologies and you find these support and resistance clusters, it can allow you to form a trading edge, right? And that's the goal here. So no, I am not trading just off of these price bias levels. I'm not just blindly buying $25 or blindly selling $25 as a support and resistance level. It's just one variable that is proven to be statistically significant support and resistance that is factored into my overall trading strategy. And there's no indicator for these. I showed you how to do, the horizontal levels. You can just kind of go in and map them out very, very quickly with your horizontal line tool. If you were trying to do $25, right, you can just, adjust it, type it in, whatever. It's not too difficult to do manually. So keep that in mind next time you're charting, next time you're trading, that these big even levels, while a lot of people, think that they are, a lot of people discount them. I think a lot of people also underestimate them when in reality they are statistically significant support and resistance levels. I hope this video was helpful. If it was, like and subscribe. And if you want access to the rest of the cysteine research indicators, go check out cysteine.ai, grab the indicators bundle, or sign up for the research hub. Thanks so much for tuning in. Peace.